Hello, beautiful people. Welcome to another episode of me. I'm your host, Amit Moria, and today I am gonna do a follow up video on my M1 Finance portfolio and gonna basically walk you through some of the updates, what I did, and my dividend activities, what's going on. And I know a lot of people actually watched this video, so I figure it's worth a follow up. So it's kind of interesting. So right now in my dividend growth, I have $2,410.78 as of today is July 24th, 2020, and I have gained about $36, about 2.57%. Market gain, which is in minus, and dividend earned total $55.99. And this portfolio I really started last year after basically watching a lot of other YouTuber, and I was basically very interested in. I was using Robinhood before. This is just a little bit background in me, but I wanted something that where I could put all my money, and if I all my money in terms of companies, and I didn't want to think about how much money and all that. I only wanted to do the work at once, so this kind of fit right in. That's why I kind of used it. But since then, I mean, there are other platforms, but this is by far one of the most easiest platform that I have came across. And best of all, is free. You know, and once again, this content is free, so this is my result, and do not try to sue me. And you are getting this content for free, and take any of this information and experiment with your own. Think it more like a education than I would say advice, because you should really seek advice from professional, and you are not paying me to give you an advice. Okay, so that out of the way. So let's review my passive income. One of the update that I did was this growth. I used to have bond, 20% of my portfolio, but I sold all my bonds, and I've invested in about 38 companies, I believe. So here are the companies. This might be a little bit redundant, but however, these are the companies that I sold out earlier. That was because basically I wanted all passive. Now I have realized that I don't want any bond at the moment, so I kind of got rid of that and came back. These are really are growing companies, and they also most of them actually pay somewhat dividend. So that's why I have these. Okay. Let's go back. So right, I did. Obviously, real estate is down, utilities down, finance down, telecom is down, and energy is down. The only ones that are up in industries, consumers, tech, healthcare, and my growth. So, yay for that. Let's look at some of the activities on this. I am making almost a couple cent per day. This is nice because I don't have to do any work whatsoever. I have put in money, and I'm more than happy receiving couple cent a day, and eventually it will go to a dollar, and dollar one will compound itself. So yesterday, 2 days ago, today's 24th, so 23rd, 24th, 22nd, 2 days ago, today's 24th, I got from Cisco 5 cent, and from Comcast I got 5 cent. And on 21st, 3 days ago, I did that sale with 38 bought and for sale. I got rid of my all my bonds. I share bonds that was 3 year, 3 to 7 year, and 7 to 10 years. Instead, I decided to put all that money into these 38 buys. Okay. Some of them I can go through it, like for example, Telio, Esox property. This one actually also own in my real estate one. So I'm gonna do a consolidation basically to maybe do separate real estate, but I do have percentage that going on, so I'm gonna maybe get rid of them or something, because that's like a little redundant to kind of have. But right now I just wanted a place to hold my money in, so that's why you see that. Before that, on 17th I got 15 cents. I mean, I'm making 10-15 cents a day, which is not bad. So that's one of the activities. And right now I have balance of $15.25. This soon as it turns, I think $25 is the minimum nowadays that M1 has. It will go ahead and auto reinvest and will go in these percentage wise: 33%, 20%, 14%. My strategy is a little different than most people, because some people are solely focused on dividend growth, or some people are mainly focused on growth itself. But I do believe in having combination of both, because I want have appreciation and I want dividend at the same time. Just like you would own, let's say, real estate. In real estate, where you get appreciation when your house value goes up, and every month you are getting rental money, right? So that's the concept I'm looking at, and it's working fine with me so far. Yeah, I do need to do a lot of consolidation, like in real estate, right? I do own the ESOX, I'm pretty sure in here, but if not, I'm gonna move it, that one here. I have this many, but however, I want to show you my other portfolio within M1 Finance. You can, so I one of the things you can actually max. They don't let you create more than 1, 2, 3, 4, 5. So M1 does not let you create more than 5 different portfolio. I tried, because I was gonna do that separately, all of that growth that I did here instead of the bond. So these are other ones, that big company, monthly dividend, and S&P 500 Aristocrat that you see here. I like to experiment. I'm very big into basically capturing what happens if I do this, what happens if I do this. So that's why you see other companies. But this is my majority of the money tied up in M1 Finance and this passive income one. But eventually I want to basically even it out or somewhat. So for example, I have a big company. In my big company, I put in $100 right now. My total value is $87.99. I am not so much worried. That's because if you look at, let's say, real estate, right? Having somebody telling you value of your house every single day, shouting out, "Hey, I'll give today is $50. Tomorrow, the same person comes up $100." Again, every single day, this person is like just shouting out, today is $60, tomorrow is $80, right? After a while, you shouldn't really look at much, especially because if you're not selling your house at this point, I am not selling anything, therefore I am trying to ignore. However, I am conscious of how much money I'm losing right now. My 11% of the value in this one has gone down, but the companies that I am invested in, I'm not so much worried. This is also, again, this entire portfolio is an experiment anyway, just to see how they would perform. And if any of these are basically performing really good, maybe I'm gonna basically over time I'm gonna consolidate all my portfolio into like a top few companies that I want to hold. But in order for me to do that, I feel like I need to have look at which companies are doing better. Eventually I'm just gonna go in not as this much of diversification. That's why you see all of these big companies: Lowe's, Adobe, Infosys, Home Depot, Deere, Accenture, United Healthcare, Oracle. All right, and let's look at their dividend activities. So on 20th, Intuit paid me 1 cent, and this one doesn't pay me as much often dividend. I think simply because I don't have too much money in. Maybe I need to put a couple more, because I believe there is certain amount of money you need for certain companies before you can. Maybe in this portfolio, because like a couple of them are 3%, they might not really have enough money to be able to calculate so I need to, you know, put a little bit more. All right, so that was my big company. Let's look at the monthly dividend. This one I have very high hopes in, simply because I, just like most of you are, started probably watching passive income and learning about it and how you can make more money outside your work. And after that, you were like, all right, you were convinced, like, let's go ahead and own a real estate. And just like many of you, I don't have that much money lying around right now. So basically, this allows you and me to kind of invest now and see what would happen, and I don't have to fix anybody's toilet in the night. So these are all REITs. Mainly, they pay you monthly. My whole entire concept is to, I wanted to have a monthly money coming in, some sort of, and basically, you know, I want to collect monthly paycheck. If you know what I mean. I put in more than $1,000 in this one. I think net cash is 1105, and right now I'm down by $216, about 21%. Again, nothing to worry about, because again, these are all supposed to be long-term and monthly investment. And if we look at our activities, I just got paid yesterday $1 for PSEC Prospect Capital, and again they paid me 4 cent. Same company, PSEC, EVV, Eton, they paid me 78. And you're seeing this PBA, that's Canadian, so they just took my 2 cent for their tax. PBA, they paid me 16 cents. So you know, you get the idea. So entire concept is to have monthly dividend money. Right now I'm not sure if I'm making that much, because if I were to the reason I'm not making much at this point, because if you look at my portfolio, when it started, and it started in January, February, or some of them I actually ended up, the ones that you see positive right now return, that's because I did a update to it. I sold a couple companies and I bought in a couple companies. And the ones that I bought in, obviously they are in positive right now numbers, and the ones that didn't, they are in negative, because you know, real estate or most of the companies are not doing that well right now. Okay, and the reason the most of them not are, probably a lot of them are not paying me dividend right now, because it's when do you buy it. Most of them, they fall on after their dividend announcement date, I think. So that's why I am not getting full on dividend monthly income yet. Sometimes some of these companies, they 3 months, 4 months advance, 5 months advance, they announce that, and if you didn't buy it then you won't qualify. So that's kind of the trick. So it's just waiting game at this point. The money is there, and let's see eventually how much money they will give me. But if you want to see what my average been, right, I can do this, and let's look at month of 07, right? Let's see, 01, then 2020, and okay, and do this, which would be 07. Today is 24th. Excuse me, I don't have much space in where I'm putting my camera, so that's why. Okay, so this is all July. So start from July 15th. This is how much I have gotten paid. I can do that for you. Let's look at the second, guys. I'm gonna move the camera a little bit so I have space here. Start with 43 cent. Okay, 1 second. All right, you can still see me, but you should be able to see my screen. I think that's the most important part. Let's look at, okay, 43 cent plus 41 cent. No, that's fat fingering. I hate when that happens. 43 cent, 41 cent, 78 cents, $1.06, point zero, no, 12 cents. So we are here. All right, so that's plus. We're gonna do 0.09, 0.056, 0.42, 0.23, 0.43 right here, plus 0.88, plus 0.41, plus 0.12 right about here, 0.12, 0.32, 0.16, so right about here, 16.78, 0.04, and 1.02. So $8.38. Out of that, I had to pay 3 cents on taxes, so 0.03 plus. So really, so far I have made $8.35. And this month is not over yet. In July, it would be great to see if on consistent base I can make $10 a month on my $1,000, roughly about little over $1,000 investment. That's kind of 10%, I believe. If I'm not right, I don't know. But it's still $10. It's a lot of money, especially right now, because for that $10 I did not have to work, and I can buy Starbucks. Or if I didn't buy Starbucks, right, normally they cost $5. All I had to do was invest the money once, and in the future all I have to do is just put the money in, and that's it. And here are your June. Obviously in June I did not make a lot of money because many of them I did not qualify. Again in May, right, I had a little bit more companies, but yeah, so that's what you're looking at. I really started in May 11th, not 11th, but in sometime in May, I believe. But my May 13th, April, May, February. February 21st, 2020 of this year, started with $100. Then on February 28th, I put in another $900. At that time stock market was doing amazing, and I was like, yes, I'm genius. Right, probably most of you when you starting out, and then you're like, wait, what? And then there was this stock merger. I'm not for the UBS London branch, not sure what they merged into. I never looked into it. Then I deposited another 100, so that's comes out to be basically $1,100. So basically what I can do from here now on, all I have to do is, like, let's say I get paid, whenever I make money, all I have to do is just deposit some money, and that's it. And forget about it. And the system that M1 has provided me, it will automatically go in and invest in every single one of these companies based on the percentage that I have allocated, 777. Most of them are 7%. All right, and whatever remaining, it will be cash. I can deposit that cash or leave that cash in there, and eventually, as soon as I hit $25, it will go ahead and reinvest in self, right? So that was my monthly dividend that I've been experimenting with. And there's also another experiment that I have kind of going on the side, which is S&P 500 Dividend Aristocrat. So one day I came across basically the concept of aristocrat, and I was like, okay, I literally Googled, I was like, who are the companies that are aristocrat, and I want to invest in that. And I want to see how over time how they perform. So basically these are all of the aristocrat. And what aristocrat is, you can Google, YouTube, whatever you like, but a company, in order for them to qualify, they have to continuously pay 25 year 25 year or more continuous dividend. And I believe they have to, and you want to have a growth one, not the cut one, but I think that's one of the qualification. But these are all of the companies that I found after Googling. So that's why you see here. And basically I just let the system basically decide percentage, and it determined that some of them was 2%, some of them 1%. But yeah, so that's what you see. But this was actually turned out to be one of my best experiment. I wish I put in more money when I started in March 27th, because right now I'm up 23% or $26. It would have actually, this would have been nice if I did that from the beginning, but you just never know, so you gotta just do it, and eventually you'll see the result and what works, what doesn't work. All right, so here are their dividend activities: 1 cent, 1 cent, 1 cent, and there's a buy, this $1 buy. I'm not sure how this is working, because I thought the minimum to buy on anything was $25. So I don't know what is this, what's going on these. But yeah, here you can see July 1st, hold on, June, let's keep going. I deposited $100 on March 26th. Okay, and then there's about 64 companies I have not touched it, that I identified at that time that they were dividend aristocrat. And then I basically dumped my $100, and the system automatically went ahead and bought all of these stocks. And then after April came around, and there are certain companies that started paying me some dividend. And fast forward, we are in July right now, and here are the dividend. I'm not so much doing dividend at this point on this one, because I want to have $1,000 at minimum in order for me to compare it with especially with the monthly dividend. And the big company is, again, my goal is to get them a number based, maybe let's say 5,000 on dividend, then 5,000, 5,000, 5,000. Then we can truly compare which one is doing better and which company is actually is growing based on how do I like. Maybe then I'll consolidate into one company. Not one company. I'll never put all your basket in one, but couple companies, and take out the other monies if I'm already up. And so that's kind of the idea behind it. Or the another strategy is that just go with the flow and let's see what happens basically. Maybe I gain 10% every single year, or I lose all the money. I'm not so much worried, but because I am very curious person and I like to do experiment, and I feel like this is kind of good. I'm having fun. I'm making money, regardless, 1 penny. But end of the day, if I have a million penny, I am a millionaire. So it's $1 million is not much, but it's still I'm $1 million rich. So hey, these company want to pay me 1 penny each, it's fine. All right, so that's what I have. So it's your risk. This guy essentially had $75,000 in his portfolio, and what he did was he became Plus member, and then now he's borrowing at 2%. So he borrowed against his portfolio and then went ahead and bought more stock with it. In turn, basically, he only has to pay 2% for that $25,000 that he got. But again, if anything happens on that stock market, I'm not sure what's gonna happen to his portfolio, because either he has to deposit more money, if not, then they're gonna sell his stock and the company will get their money back that way, because it is secured by their stock on the portfolio on this platform. Cheap money, but yeah, be careful on that. All right, guys. So yeah, they do have another feature, research, which is I like free research. On my last video, I showed you guys how to do research with Charles Schwab and how do I normally start out. But let's look at the same CVS. I think it's not CVS, Chevron. I do not know how to spell. There you go, CVX. So here's very interesting research tool. Is free. All right, they gave you 5.34% dividend, and their PE ratio is 44.34. That's how many times they are leveraged. All right, and $164 billion their market cap. And you can look at their 5-year, right, how they're going, and their dividend histories and how they were. You can look at what's going on in latest news. Chevron buys Noble when opportunity meets preparation, 5 dividend stock. So there's another company called Motley Fool. They do a lot of good articles, so definitely look into that if you guys are interested in these kind of stuff. But yeah, all right, that's all I have. Thank you very much.